Hello, Culture Matters podcast. I'm so excited to introduce you to our guest today. But before I do that, here's a quote that I picked just for this episode. The first duty of love is to listen. Paul Tillich. Our dear friend, Andrew Berman, is back with a question. Do you die by diversifying? Andrew Berman is a friend, an advisor, a thoughtful person that brings every ounce of himself into every conversation he has with leaders of industry in every industry that he's put himself in. He's a friend of the Culture Matters podcast. You've heard him before. And if you haven't, do you even listen? Thanks for coming back, brother. Appreciate you. And I guess firstly, what what at this stage, like as we're in the recording, what concerns are people having? What stresses, what angsts, anxieties are people having in the industry that you're, in the industries that you have your what do you say, the pulse.
Yeah. So, so both industries that I focus on, are having lots of trouble, which is mortgage and insurance. And mortgage than anything else, just because, and of course the insurance and impacting mortgage, but in the mortgage world, I mean, people are really struggling out there. There's there's a handful of people that are succeeding. There's a handful of people actually that are finding new business models and new ways to do business and new ways to kind of embrace business. Companies. We've got a friend of the podcast, EPM, that's doubled down on wholesale, that sees this huge opportunity, and you see a lot of that. It's interesting. I had a conversation with the team at Ambiz, and someone asked me, it's like, wait, so everyone's really having a difficult time, just existing, and margins are so compressed, but how are companies like doubling down on wholesale? How are companies, like finding it's a strategy, and it really, and in some cases it's maybe out of a necessity, but the other one is they're looking to where, the Wayne Gretzky thing, follow where the puck is going, and I think actually they see actually that the opportunity in the future of the mortgage business means actually that you have to run leaner. You have to be actually using the most efficient distribution system out there. And, while the phrase brokers are better is complete BS, because, that's focusing on the business model. But, one thing that's undeniable, it is probably the most efficient distribution system to get mortgage products out to the market. So, my point is, you see companies that are struggling, then you see companies who are kicking ass, or maybe they're not kicking ass today by production standards, at least judging by previous history production standards, but they're profitable or near profitable, and they have a vision because they're using this time of suckiness to become excellent. And as actually, well, these, in these down times when we're not even doing $2 trillion in business, it's, the gains are small. But, when we have the pendulum swinging to the other side, it's going to kick ass for those firms and the partners that are aligning with them. It's an awesome thing. So you see, and I use EPM because, you have EPM people on here all the time. And a friend of the podcast, but there's so many other companies out there that are seeing this opportunity, and
Mm.
it's an amazing time, and it is a great time to double down and focus, which is the irony of the topic that we were just talking about, about diversifying.
Yeah. What, where could the death be in diversification? Like, in what types of diversification are we talking about? Is there a difference between diversification of assets, diversification of time, space?
Mind. It's the mind. It's the people that are posting on Facebook groups that instead of looking at their own business, they're looking at other businesses. I'm trying to actually, think of examples that are not going to specifically call out people that could potentially be listening to this, but in sum and substance, if it's not synergistic to your business, if it's not an important piece of your business, should you really be looking at it? Like, so I'm talking to mortgage companies who are getting involved in, PNC business, and so property and casualty, and this is a very natural synergistic part of the mortgage business. Every mortgage is going to have a homeowner's policy. Potentially, if you're in Florida or New York, you're also going to have a flood policy, and ensuring that you are going to be able to get an efficient delivery of a binder in time for a closing, so you're not going to lose you're not going to miss a deadline, is so important. And there's also some nice cash in there to help actually, during the these maybe lean times. And also, listen, we're not going to be margins are not going to be increasing. No one ever wants to pay more for stuff, and generally speaking, they'll be frozen or maybe shrunken down more. So we need to find opportunities to be able to continue to serve borrowers, and that might be through a diversification of a product that is part of the mortgage process. Every mortgage has to have it. I mean, you look at actually, title companies and mortgage companies, like there's synergies between these two organizations. So I think actually it's a natural progression that PNC firms should be looking at, or mortgage companies should be looking at either partnering with or starting their own PNC firms.
And can you define the PNC again?
So property and casualty, and this is really, it's, and for the natural place is the homeowners policy and the flood policy, and in those areas where that's relevant. So going through your mortgage
What's
process.
casualty?
um so
What's that?
property.
Property, I'm thinking flood and home.
Yeah, I'm so that's a good question. I'm
Casualty, like life insurance?
It's more, I guess, about the liability. I'm thinking it's a good question. As I'm a licensed life and health agent, but I'm just starting to over the last probably a year and a half or
Oh, I
so,
see.
be getting involved in. So I'm sure there's
Oh,
actually a
is
specific.
property casualty in one bucket, you're saying, and then could it be a fatality at your home, like someone trips and falls on your
Yeah,
lawn?
like a liability. It's a
Like if
liability.
I
Yeah.
break into your house and die, then you're liable for me. I just
Yes.
like read an article about that once, or heard an article, not read, heard.
Yes.
Yeah. So that's what that you would want property casualty for that.
Yeah, you break into my house, you fall on the kitchen knife as you're going to steal my cash off the table that's in the kitchen. Yeah, I gotta write a check to your family, I guess, or my insurance company has to write a check to your family.
Are you seeing that people are succumbing to the pressure of less business coming to them and less margin of the business that is available?
So I'm seeing more desperate calls or desperate posts, let's call it, because I'm seeing on Facebook, onto groups, on people's personal profiles, looking for ideas, like just looking for help, and they're looking for things outside of mortgage. I think there are people that are just frustrated with the ebb and flow of the mortgage business, and they're looking for diversification outside of mortgage, which sounds great, but as we were just talking before, you can't be exceptional at a lot of things. You just can't be. I mean, you need to find, one thing that you could be exceptional at and focus on that. So, you know, if your area of expertise is mortgages, um, you need to kick ass in that before you can open up a retail store or do something completely related, become a contractor or something actually that has nothing to do with your core business.
Do you think that what what percentage of that lack of focus or straying from the core competency could be tied to people's liquidity? Example, like if I'm
Mm,
scrolling Facebook
yeah.
and I see this opportunity to make quick cash, whereas I have a void in my income because of macro factors, I might be seduced. Versus if I have reserves, I'm like running into the building. Reserves is like the fireman running into the building with a hose, putting the fire out.
Yeah.
No reserves is like running away from the building and finding a new place to live, but you don't own the house, you're renting. You got to start all over. Like I'm just trying to. How much of it do you think has to do with where people are set up in that time?
I think it has everything to do with it. You have people that are desperate, looking for options, looking for solutions, and they can't focus on the long term vision. We know in mortgage rates are going to at some point go the other direction. We're not going to have a seven handle on rates forever. We're not going to potentially be looking at rates in the eights. I mean, it's just not going to happen for forever. And those who are able to survive and get to the other side of this are going to be just victorious in just these tremendous ways. And which is great if you have a cushion, if you have a something to be able to stand it, and also if you have a vision. I think the other thing is that a lot of these companies, or maybe in individuals by themselves, as we look at individual originators, um you know don't know what is different about them than anyone else, and don't actually have a way to hedge against the future changes, or the confidence, because so many people are just accidentally successful. They're not planned successes, especially in the origination business. Yeah, I talk to people all the time who, just got into it accidentally, and because of, someone they knew that gave them actually, a lead source, they were able to kick butt and they became amazing at what they do. Many cases they don't realize even how amazing they are, and they don't have that confidence, to think about the future and think about being able to change and modifying their path to saying, okay, maybe actually I should be looking at direct to consumer. Maybe the working with real estate agents was working for me really well, but something, I need to find actually a way to get directly into the consumer's mind, not just an afterthought after the real estate agent shows them the house that they really want.
Have you seen a greater interest in content, like personal content distribution?
So I think that's always it's always been it's been a trend. It's been a growing trend, and of course the help of now AI to be able to take our ideas and fine tune them, and be able to also help inspire content. Means that I think two things. One, I think content's getting better. I think it's also becoming a lot easier to create content. I mean, listen, I'm using content tools like AI content tools, like just to like even sending messages to people just for assistance. Like I'll say, hey, listen, this is what I'm trying to say. Make sure my grammar's okay, and make sure this is what my point is actually be heard, because sometimes my stream of thought doesn't always connect with the words that come out, and the content tools like AI allows us, I think, to be able to create content better. So content is I feel is getting better. I think people have amazing opportunities to be able to create content without having to hire, teams of people to be able to do that.
Hmm. You've mentioned a couple times these individuals or entities that are going to have this big outcome. Um, what makes you so certain?
Well, so I think in times like this, I mean, part of it is literally just about having a plan and not being sucked down by negative feelings, and not being, not being consumed by, things that used to work for you, and being able to have a vision for the future, and being able to create a plan. And I believe that those individuals who are able to, to come up with a plan, because any plan is better than no plan. And I truly believe that. I think actually, uh, a a crappy plan implemented is still better than no plan. You have goals, you have actually things, and you can adjust along the way. You don't have a plan, you're going nowhere. I mean, we talked our last time you and I met, and we're on, you interviewed me. We talked about actually, this concept of a ship in a harbor, that wants to make it to a destination, and if it doesn't know what that destination is, and there's no plan to get there, it's just going to remain in the harbor, and it's just going to maybe wind up on some island, you just abandoned or something. But if you have a plan to get there, plan might not be the greatest plan in the world, but you can adjust course along the way. It's having some planning and having some vision, and knowing actually that there is hope, and not just doing the same shit that you were doing over and over again without actually thought going into that.
Is there buyer interest?
Is there, when you say Byron?
How much of this um disruption in the home front is the psychology of the people tasked with helping buyers achieve their goals? Like you mentioned, rate.
I mean, people are still buying. There's no shortage of people that want to buy. There's just actually there is just a shortage of people that have the ability to buy. There's I mean, there's definitely that, but part of your activity as an originator today should be helping those people getting a mortgage ready if they're not ready. But if I mean, I don't think actually I'm well, you'll see studies all the time out there that says that there's a trend for people actually saying actually that home ownership is not what it once was. But I still don't think actually that the majority of people out there will ever be in a position where they won't want to buy and own real estate. And even actually the people that own that are choosing to rent for their primary residence, are interested in real estate for investment purposes.
What's that argument against the idea of actually owning someone's home?
Well, I mean, listen, if you're, I think, case in point, if you're, I mean, if you're in your, let's say you're in your 20s, you're single, you're in an executive, in New York City or Northern California. A affordability could be an issue in terms of buying something, and you maybe want flexibility. When you're buying a home for your primary residence, you're losing some of that flexibility. I mean, of course, you could say, well, I could
It's
rent it
funny.
out. What's that?
No, it's funny because I hear when you say like person A wants flexibility, I hear person A fears responsibility. And then it makes me think of our transient culture and the entitlement. And like, I'm curious what, I don't know. It's like, here's a bomb, figure it out. Here's a grenade, let's play hot potato with that. Right. So
Yeah.
are my, are younger generations being seduced by these hawkers of these new edgy ideas? One of them being you shouldn't own a home. You want that flexibility. You
Well,
shouldn't, you know, get married and have kids. You want that flexibility. Just be an aunt and uncle. You
well, listen.
shouldn't continue the progression of the species. You want that flexibility. No, just
I think it's time and place. Listen, I mean, if you're, if you're 40 years old, and this is, I mean, this is me, imposing my thoughts and my feelings. You should be looking for some kind of stability and some kind of, something, because you're about to get into your most productive years of your life.
I
Um,
would think that gets even harder the longer that it isn't had younger. Like if I got as much
yeah.
poon in high school as I would have envisioned I could have, why would I have ever settled down? I'm just so good at this, right? Clearly I wasn't,
Interesting. Yeah.
right? So I don't, that just pops in my head too. It's like the more transient we are with our relationships interpersonally, the harder it becomes to have relations.
Hmm.
That's a
And
paradox.
yeah, yeah, yeah. I do see that, but listen, I know. Listen, in my 20s, I didn't, I was renting, um, but to me, because I did personally, I wanted the flexibility because I wasn't sure where I wanted, and I had the luxury of not having to say, all right, I want to raise kids here. I was able to live in places that weren't necessarily the greatest places to raise kids, but they were just, they were, close to the beach, and like had actually all the, the leisure things I wanted. But when it came time to actually to settle down and become an adult and start to procreate and further the species and replace myself in the world, it was time to say, okay, I guess we got to pick like some boring suburban neighborhood where there's decent schools, and our kids aren't in danger of being you know shot up or something.
Interesting. So I guess, just for the listener's sake, what what value what value comes from the owner the responsibility of owning a home, on the personal front and on the financial front?
So I think actually there is something about the when you have the stability of your own home. And because listen, when you don't own your own home, I mean, you're basically just you have no control over your shelter. And control over your shelters. I mean, that's a scary thing. I mean, kids are destroyed because they don't have stable homes.
Mm,
And I got to imagine actually, that has to have maybe some impact on even adults. But knowing actually that really at any point, listen, you're if you don't own your home, your landlord could, unbeknownst to you, not be paying their mortgage and have a foreclosure. And whether you have a lease or don't have a lease, you might be in a not great position. So, having more control over your life is important. When you're in your 20s, you have the luxury of big whoop, something happens, I'll find another place, move into another place. But I can't necessarily do that if I've got two kids. So, in your 20s, you have that luxury of being able to do that. So I'd say take advantage of when you can, but just know actually, your path should be towards controlling, your shelter.
mm. Does it build wealth?
Does owning real estate build wealth?
Even
I
on
would
the
say
home?
so. Yeah. Yeah, I think it's
Like,
a tremendous wealth. It's some of the wealthiest people in this world actually have created their wealth through real estate. Some of the, I mean, just personally, I mean, the wealthiest people I know actually have significant real estate holdings. So yeah, when there's no question about it, real estate is an important part of a successful strategy.
what's, more specifically, the home? Why?
Why? Like if you're owning your home, I believe actually it's almost like, you're kind of investing in real estate. I mean, it's not a full investment because it is your home and you make decisions that not necessarily are investment, but it's like you're having a piece of actually, real estate investing when you own your home, as opposed to helping your landlord own your home.
Hmm. What do you mean by some of the things that are done in the home they're not investing? I mean, like,
Um,
yeah, what do you mean?
So let's think of something here. Like so let's say I'm just trying to think of something that might be not necessarily an investment, where you can potentially get a higher price, but is something actually that would be for you more of a luxury. So for instance, okay, I'll give you a perfect example. One of the houses that my wife and I were looking at, had a room with a hot tub. Like inside the house, it was like it was a room dedicated, for this beautiful jacuzzi. And I walked into it. I was like, "Oh, this is awesome! This is amazing! I just love this. This is great." And Barbara's like, "This is the worst idea in the world. This is just something that, like, this is just dealing with the potential mold issues. So now all of a sudden here we have 50% of those potential buyers in that room at that very time, loved it, and the other 50% hated that. So, that's potentially something you would do for yourself. That's not necessarily a great return on investment because, only, people like me will see actually great value in that, and people like my wife will be like, this is just dumb.
Now, would you say that there's a behavioral psychology aspect to the home ownership being the investment then? Like, uh, people can get a bit overzealous or overindulgent that undermines the potential wealth building effects of the home ownership.
Oh yeah, of course, it's great, and that's always so entertaining because you get to see some of the people that I'm trying to remember. There's a term in real estate where you build something actually that really is only designed for you and for a specific purpose. it's been a long time since I took my real estate license, but there's this term that describes it. But basically, when you're building something that's only meant for the small audience, like listen, I'll give you an example. My dad, for my stepmom, has a wheelchair lift. And a wheelchair lift, if it's needed for her, she's got to have that.
Yeah.
But like most people don't have someone handicapped in their house. And that's gonna definitely take away the value, because if I'm gonna buy that house, that means I got to remove this wheelchair lift, and put something in place to fix it.
How much of homeownership's return then could be tied to just the actual owner's plan, life plan, behavioral choices, personal development. I don't know. I'm curious what you think or what comes to mind.
And I guess the when you're buying a home, um, you have kind of two paths. One is basically saying, okay, well, will I buy this home and every move I'm making be optimized for the best resale value? So like, let's say, maybe in my area, like, if you're in Florida, you need a pool in most communities. Up in New York, it's not necessarily something that is, that you need, and you're going to be able to use outside of maybe 2, maybe 3 months a year. So I think like things like that, you have to decide actually the path that you want to go. Are you buying this home? How much of that factor of you buying this home is so you can get a return on investment when you go around and sell your house? If you're buying a home and say, listen, I'm just going to be here till I die, you know, those investments, those modifications, those, I shouldn't say investments, those modifications are
Hmm.
not necessarily going to be investments. And you don't need to think about actually whether that, the odd shaped pool, that might offend other people and might not work for other people, but it works for you. Is something you should do or shouldn't do.
What do you think about the psychological effect of we ride our equity up in the upswing of the market, and then we sell our home, benefit from the tax advantage, and then put all that equity in a new, also appreciated asset under the guise that we had all this, like, I don't know, that we can, so now we think we can afford this new asset just because we had a big down payment to put down, but the down payment was based on appreciation of the previous asset that now is going to the new asset, which is much more expensive, also appreciated, and not factoring in the increase of our lifestyle fixed costs going up.
Hmm.
I'm just like, so like that thought experiment. It, like, if my house went up in value tremendously in a relatively short window, like less than 10 years,
Yeah.
and then I move to a much more expensive house because I have all that equity, does my income actually cover the incurring operational costs of that new lifestyle? That bigger home is going to cost more.
Oh yeah. It's going to cost more. You're going to potentially
So
be
my
living in a
down
life.
payment, well, let me put a cherry on this. But my down payment didn't come from me as an individual saving money, like, making psychological decisions like, I'm not going to eat this brownie. I'm going to save money for this investment, for this
Hmm.
purchase. That's a psychological decision. I have to say no to could be anything. I have to say no to the vacation, yes to the house. So that challenges my psychology. If my savings came from equity as a result of increased appreciation as a whole, then I haven't saved any money. I've been given equity based on the market appreciation. And now I've increased my lifestyle in the second home purchase, unawares that I am not a better person at all. Maybe even arguably a worse, maybe like a worse. What I mean, better in the context of like, at least at the very minimum, more, more productive to be able to burden the responsibilities that come with a house twice the size or something. I should like this. So that's my thesis.
Yeah, yeah, yeah.
That's going to create a lot of shit. That's kind of the thesis. That's going to create a tremendous amount of cultural shit.
Well, but here's the thing. But you're I completely get you. You didn't earn that down payment, and now actually you were like, it's almost like you were gifted this down payment
I'm earning it
because
when I say no to what I want for what I believe I can get if I follow Andrew Berman's
yeah, yeah.
advice of having the plan.
I love it. I love it. So, all right. So,
This is your idea. I'm just
yeah.
explaining.
Oh no, no, I get it. But I'm so I'd say I just I've here's the way I look at it.
I need caffeine. It's early as hell on Sunday. I can't even lift my arms up because I did too much exercise. Go ahead.
If so how you got that equity, how that equity built doesn't make a difference. You still look at your, as I'm speaking from from the common consumer out there, you still look at your Zestimate and see actually, your house went up 40%, and you will attribute that to your, good decision to buy that to buy that house in that market. I mean, it's the same as like, let's use this analogy. If you were a gamer, and because you're a gamer, like Nvidia, like processors are great, and you're just like, okay, this is awesome, and you invested in Nvidia because you're a gamer, you play games, you know nothing about it, you didn't look at actually the financials, you didn't do a technical analysis, you don't know actually that when you bought it, happened to be actually, over there was a bullish engulfing pattern. You did no clue actually what was going on, but you did it at that right time, and because of that, actually, the stock is going up, and you've quadrupled your initial investment, but you didn't do anything. You didn't actually control the board. You didn't actually have anything to do with the culture at Nvidia. You didn't have develop any technology there. You just bought stock because you played video games, but you still actually, you're going to walk away. And I've seen actually people like this, where they get the confidence from that, and that confidence from that does something though. And it gives them actually the confidence that they can maybe do bigger things. So maybe they didn't earn that equity in that house, but they have the confidence because they made a good decision in life. And because of that good decision they made in life, they make more good decisions. And maybe because now actually they went from this okay neighborhood to this awesome neighborhood. And now actually they're in this awesome neighborhood, and people are around them earning more money, so they're inspired to earn more money. So maybe they didn't earn that original equity, but they got that confidence, and getting that boost of confidence is potentially what is needed to kind of help them grow and help them progress.
Um, what do you think?
I mean, I I think that it all comes down to taking action, and whether it's the person who bought the Nvidia stock because they just like it, or they bought real estate, at what seemed like a good time, and they made a decision. They took action on something. Um, I mean, that's what it always comes down to, is just putting a plan together, having some thought into it, and not being paralyzed. You know, but maybe it's not a great time to buy real estate. Maybe this is not the best time to buy real estate, but um, if you can buy real estate, you should be buying real estate. And not there's very few people that have spent time, have done research, and have bought real estate and have lost money on it with a plan. I mean, listen, in investing, as in terms of actually real estate investing, there's a lot more risk in that than buying your primary residence, for buying real estate for your primary residence, because you're going to have to live someplace anyway. You're going to have to pay rent to someone. Why not pay it to yourself?
What are the reasons why one wouldn't from a financial perspective?
And I think it's not ability to qualify. I mean, that's a big thing today. We started out this conversation. I talked about insurance, and that's a big piece now. Like it's in uh
Hmm.
fall of 2022, there were some articles that were talking about how insurance premiums are going to skyrocket, and skyrocket at the time was like 20 to 40%. I mean, now, man, I talked to a friend of mine. Said one of his clients went from I believe it was like a $4,000 premium to a $20,000 a year premium
For
for a home, in it's a flood prone area in Florida, for a homeowner's insurance. And that just makes it actually so people are going to potentially lose their homes because of that. So again, qualifying, that's the foremost, the one thing actually why you can't buy real estate today. And you can't buy what you want. Maybe actually it's just maybe you have to buy a smaller sum. Maybe you have to buy a townhouse. Maybe you have to buy you have to do house hacking, which kind of gets you a little bit of real estate investment, a little bit of taking care of your own personal needs. That there's of course, listen, if you're in some type of industry where you're on the road, listen, one might say, listen, yeah, I know you do a lot of traveling, you're all over the place. One might make a case that you shouldn't be owning real estate. So and for people like yourself who are just flying all over the place, to work with their clients, maybe it doesn't make sense to own their primary residence, but it makes sense to own real estate. That's always gonna make sense. But maybe the cards just are not right now. Maybe it's time to
Well, I'll interject on this. I think that the only time it doesn't make sense to own real estate is if you willingly sign up for a authoritarian regime,
interesting. What do you tell go more? Help
because
me understand that.
because of the who we have to be as individuals changes proportional to how responsible we're called to be based on the external accountability.
Who are we externally accountable for? Or to, I should say.
There's multiple factors. So the like the are you saying in the context of the home ownership piece?
I mean, I don't know. I'm asking you. Are you talking about actually an external accountability beyond that?
Well, okay, so yeah, our personal responsibility, right? Responsibility, our ability to respond,
Hmm.
integrated in our word. Like, this is mine. I It is an extension of me. I own this. It's my culture. It's a representation of my character. Do I know what I want? Do I know why I want it? Do I know how I can get it? Have I thought through that process? Can I think through that process? Do I have a life partner to help me do that? Because that's part of being an individual. How well do we communicate? Do we communicate? Why don't we communicate? Or why do we communicate? Are we on the same page? Where are we going? How can we go there? Why do we care so much to do the things we don't want to do? Oh, we're accountable to our kids. Well, why are we accountable to our kids? Because we'll be in despair if we're not. So we have to be responsible on an individual level to interact with each other, and as a group level, as a culture of a life, parents to the child. And the home, the shelter, is our protection against the world, because we're ultimately accountable to murderers and thieves and armies and snakes and predators and our government that gives us all this amazing things, protection and opportunity to not die from other governments, also has a proclivity to forget us, right? The corporation has a proclivity to forget the value of its people, has a proclivity to forget the value of each employee's story, the impact that the institution has on each employee's livelihood, their family. Like, it's all connected. So the right to have property also helps hold our institutions that give us the opportunity implicitly to be responsible in human beings. It holds them accountable because we have power as individuals, as families. We have power. We have protection. We have boundaries. And so there's that interplay of they're accountable to us because we have power. We're accountable to them because there's certain things we have to do to responsibly keep that property in check.
Yeah.
We're responsible to fix this. We're responsible to add that. We're responsible to learn this and learn that. We're responsible to communicate and interact with our spouses and our children and our peers and our communities. And the question becomes, are we able to respond? And then at what level? At what degree am I actually able to respond, responsible?
Those needs, to all those factors that you
Now,
need to take care of. Yeah.
Yeah. When at a deep level, like if I have no call, like if let's say, there's no right to property. Well, then where's the right to anything that I just said on the most granular level? Where is that right? Now, maybe we could say in hundreds of years, we'll evolve past that as a mechanism to protect the individual's sanctity. But right now, today, where is the right to be all of those things without the right to say, this is mine, stay out of my area. I'm doing this and this is why. Another scenario is like, if I'm not responsible for if I'm not in a position to be accountable for this small portion at that level, then what else is going away with that, essentially? Okay, I can be more transient. I may not have to stay in one place. I may not have to embrace the conflicts of my community, the conflicts of my relationships, the conflicts with myself. There will always be people to replace those people. There will always be new people. There's an infinite amount of people. What will happen to me? Who am I? Why am I? Where am I going? Why am I going there? Just imagine that's happening at scale. And who I am is really this phone. Add that into the mix. It's no longer just me and my community. It's me, my community, and my fans. So in theory, here's my synopsis. If there isn't home ownership, we are all OnlyFans models.
And this is how Jay launched his OnlyFans account.
And we will see you next time on the Culture Matters podcast. I'm not ending it yet. What do you think?
I mean, this listen, if there's ever a place to end it, I feel like that was the cherry on top to end it.
Well, I'm not going to start the quote in the beginning of this. It was like, the first duty of love is to listen, and then just like go on a tangent for 15 minutes and then hang up on you.
Oh God, yeah, no,
or else I would have done that if there was a different quote, probably.
So now I have to ask you. I am curious how, I mean, I've pontificated for long enough about, my feelings about real estate, but I like, and you've given actually reasons why I feel like, you like one should own, real estate, to have some control, to address, to be able to respond. But who shouldn't own real estate today? Like who? And I say this knowing that, well, I know your clients are not just mortgage and real estate, but man, you've got a lot of influence in mortgage and real estate. Who out there do you feel shouldn't own real estate today?
Good. Well, so it's like I have a hard time with the shouldn't, because who. I'll answer it more practically. Hey, if someone has a plan, if someone has demonstrated the ability to say no to short-term impulses, to be able to actualize the yes of that plan. So like saving resources is part of that.
Yeah.
Being able to save capital. It's a test of character. Yes, it's hard. It's clearly going to be harder for David than Goliath to do that. Yeah. I would argue that's what makes David David, though. That's what makes the underclass the next great. So who shouldn't? I don't think I'm a person to answer that, because it's on a very personal level.
Yeah.
I would say that someone's risk would be correlated to their behaviors. So that person earlier that was stated about, like, so taking actions a piece, and it's risk. If the person that, let's say a scenario, the person that never built the habits and didn't have it, has yet to figure out how to create plans with their people, their people, is going to have a higher level of risk upgrading from the rental to the house, or the house to the bigger house, proportional to the growth of their livelihood, whether it's that their employed income or their business's success. I think they're connected.
Yeah.
So, as opposed to saying, these types of people shouldn't own real estate, it's how is going to increase or decrease risk. I believe, based on what I said earlier, I think I don't have to unpack why I don't like should. But I think there's a value in in our culture
Yeah. Yeah.
to having the right to property and the ability to own that property. There's a value to that. How people get to that is going to increase or decrease their risk of being able to keep it or lose it, and how they go about that is going to increase its value to them or decrease it from a wealth building standpoint. So, but if I'm going to play along, all right, like who shouldn't own it? Maybe someone that is unprepared or perplexed by the earlier part of the conversation. Like, what do you mean responsibility? What do you mean accountability? Yeah, we're accountable to the market. We're accountable to the things that are out of our control, but we have the ability to respond in a meaningful way. So it's like, dang, someone that's going to lose their real estate is likely someone that is maybe not keeping their word.
Yeah.
Maybe not telling the truth. Maybe caught up in something. That something could be all sorts of somethings.
Be the hype around owning,
Wednesday, Thursday, Friday, Saturday, hanging out with that crowd that's sucking them into distraction. Or, I mean, who shouldn't own? I mean, who shouldn't? I don't know. But who's going to have a higher level of risk would be someone that doesn't have their house in order, pun intended, right? Like, the risk is going to be correlated to their behaviors and their plan and the things that were stated. I think is that a reasonable response? I mean, I don't know if I've really said what I want to say on that.
I think listen, it really again, you go from that person who's just consumed.
It's the plan.
Yeah, it's exactly.
And also the behaviors to be able to act it out. Like, it could not be it may not be an if, but it's a when. There's a level of everyone's different. I want to just make it clear, though, my personal opinion is that the right to property is kind of our whole culture's our progress. The progress of our culture has been contingent upon the ability to build our castles.
Yeah.
It's upward mobility.
Yeah.
The mobility upward, moving upward in the hierarchy, the dominance hierarchy, the socioeconomic dominance hierarchy. And there's lots of arguments to that, and that may not be the utopia that people vie for. But go ahead. Sorry, I'll cut you off.
No, I was just gonna say it's this conversation has evolved to just being about planning. It's really, we talked about actually, diversify, about the dying and diversification, but it's really, it's all about planning, because if you plan, that diversification, you'll find that synergy. If you find actually maybe there is actually something actually synergistic, but you could do based on a plan. But it's about having the clear thought to be able to look forward to the future.
Well, I got one for you.
Yeah.
One may not be able to plan, and that's why they need counsel. Now, one that can't plan may not know who's a wolf in sheep's clothing or not. So that's a catch-22. You can't plan, so you don't know who good counsel is, and that's why the responsibility falls on those that have more is expected.
Yeah.
I just throw a grenade in there. It's like, but not everyone can plan. People are bad planners. Why? Well, because people are people.
Yeah, but I get that, but not everyone is going to be successful. Many people are going to be content with just having a normal life, and maybe they not everyone needs.
All right, just because they couldn't be or they may not be doesn't mean they necessarily couldn't be. So I agree with you. Like, just because a small percentage are fitting through that thin door. That's a that's a biblical reference. The thin door or whatever. No, like just because a lot of people won't be successful doesn't mean they couldn't have been. I mean, who would I be to know that? I believe you see what I'm saying? Like,
Yeah, but I just think, listen, I think there's a lot of people out there that are accidentally successful and don't have the ability, to vision a future. They work. You can give them, they can work their butt off, but they can't necessarily plan. And sometimes they're successful. Listen, I've got one friend of mine. He is unbelievably successful because he has a lot of skills. He's not a planner. Like, you can't talk to him about, actually, like when I talk about the business that he works in, he's always a worker. He's never an owner. He's not a founder. He's not a manager. I mean, he's actually really probably a shitty manager. When I've seen him in position to manage people, but he kicks ass at what he does. He can't plan. So, so
well,
this,
that brings us to what I said though. That easy for if planning comes naturally to us, that's why we're in the positions we're in. The people that doesn't come naturally to, if they're not open to have the advisors,
yeah,
then like you see what I'm saying? This is meaning that's where the idea of the advisors come in, the idea of mentors,
yeah,
the idea of coaches, the idea of having external parties serve the greater vision with the operating driver. Like, there's a connection, I believe, between the psychology of the operating driver, let's say that guy,
yeah,
how they relate to their employees, how responsible, able to respond to conflicts with them in a open, constructive way to grow them up the chain, is going to be tied to the relationship that person has with their patriarch, their matriarch, their advisors, their counsel. Do they even have that? What's that relationship like? Or are they accountable only to the market? Maybe the market's really good, so they're not accountable to the market at all because it's an upswing. Money's cheap, business is there.
yeah,
So there's no accountability. There's just their ability to respond. And their ability to respond is all reactive because it's easy, because we have money, we have power. Their ability to respond is going to be revealed in the accountability of the market. So when the market goes down, when things are tough, when times are tough, it will be clear that their culture was flawed the whole time and they were riding the wave. They were never able to respond in a meaningful way, in a constructive way. There were not open feedback loops of communication between the leadership and the people.
yeah.
There was
Right,
just everybody riding the wave.
right place, right time.
The plan gets created from those outside of the culture that are serving the culture,
Yeah,
and those within the culture that are serving the culture, and that beautiful symphony that plays where there's open feedback loops being opened up as they close down from success. An example, like you and me have a plan together. All right, we're being proactive. We created our business plan. Now we have to go take action, like you said. Our characters are going to be tested. We're going to have to say no to things and say yes to things and figure out what to say no to and what to say yes to. We're going to have to actually like have impulse control. Like, we're going to have to be able to respond to things that are in alignment with the plan and move us away from the plan. We're going to have to face the existential crisis of, wait, we're doing all this and then we're just going to die? Why not just eat that fucking donut? Like, why not just spend that $1,000 on this?
yeah,
So like, we literally have to contend with the eternal while we're doing this random made up stuff. So that tests us, like, because right, it's all just there's a macro or a meta distraction,
Yeah.
which is like we're all gonna die. Who cares? Why do this? Why not eat this? Or why not save? Why not spend this? Why not do that? So right, so we have to contend with like what we really believe about the world, and this is the most interesting thing that one of the most interesting things to me is if we end up succeeding, you and me, we made the plan, our character is tested, now we get the result, right? We get the result. Well, we were proactive with the plan and proactive in our behaviors that got the result, but now we're reacting to the result. So now what was proactive is now reactive. So it's undermining proactivity. And that's inherent in the system. And based on our character, we're able to respond or not. So there's
Oh
character
yeah.
and there's the system. The system becomes reactive, and then our character is supposed to make it proactive again. And our character may fail at that based on our lived experience, our education, ad infinitum, blah, blah, blah. The whole thing is like planning is part of it, acting is part of it, being able to respond is part of it. There's a lot of parts of it. I guess our people on this will have to just keep listening, and we'll share some of the parts as we continue to do these episodes.
Yeah. And then actually knowing that it's constantly planning and adjusting and not being reactive because I mean, and so that's the interesting thing that's happening today is that so many mortgage companies had planned and have done all the things that we're talking about, and they've gotten to this level of success, and then they just stayed there. They just bit so they plotted out because to open up a mortgage bank is takes some significant planning at any point. But opening up a mortgage bank and being successful, in 2015 is vastly different than being successful in the mortgage business in 2025. And those who are constantly, planning and are able to respond, to these market actions, are the ones who are going to continue to win or potentially, really have their biggest gains as these companies aren't evolving because you're not evolving, you're devolving. So, then you're going to have those that are making changes and making shit happen be the new winners.